So what I'll do is, nice, Douglas. And you know what? We should have news here today too at 7:30, 7:15. So this is gonna be 7:15. We're gonna get some news in here. This is gonna shake things up a bit. So this is gonna be in 3 minutes on the new 15-minute candle. This is gonna come out. It's gonna be some high impact news.
So is that possibly people trading on that have inside knowledge of the news, expecting it to drop?
I guess one way to play this would be you could look at this. Let me look at this on a 30-minute. So this is clean on a 30-minute, but it didn't rip up the whole thing in the 30 minutes. So maybe like this 15-minute on the news, wherever this body ends on this candle, maybe you could play the buy again on the news. But again, that's just going to be, it's going to be a bit risky doing it that way. I might just look at, I have interest to see what GJ does underneath this big support, because this is going to be a big range here that we could potentially play in. That would be a cleaner trade than gold right now at this point. So maybe if we were patient, we got 15-minute candle to close down below these bodies of these candles on this support, we could play the breakout down here underneath this wick to continue down. Let me look at the 4-hour too. And GJ's still been going down quite a bit. So we would be going with overall momentum and momentum coming into this session as well.
I'll probably be back. I gotta go get some more coffee before the 7:15.
Yeah, go ahead. So yeah, oil did drop off here a bit. I'm gonna have to remember I have my car is outside running because I've been pretty bad about driving it really this whole summer. I let it sit. Maybe it was like 2 weeks ago, 3 weeks ago, and it not a good idea. Yeah, so this news is going to hit here in 20 seconds, and this is going to shake things up quite a bit. Let me look at, yeah, GU doesn't look too good. See, I would be willing to trade GJ today if it were to, and here we go. This just might not be our day today. Oh, so there's gold breaking back up in that range that I talked about. And GJ's already pushing down. So it looks like terrible numbers on this. Gold's going to break up pretty good today. This data missed pretty bad. So there's gold ripping. That whole range filled. That's a pretty decent move. At this point today, I doubt I even trade anything. I mean, everything's just going everywhere without me. There goes GJ too. I think 15-minute didn't close how I want. Already broke out into that. That's a 10 pip move too. Is what it is. It's very annoying to look at. Nice. So someone says they caught GJ yesterday. Have an order set in this morning. Yeah. I mean, here's the thing for anybody that hasn't like been on here. I just look for the same thing over and over again. And then when it's there, I trade it and it's typically there every single day. There is days like today where everything just moves right off of the open pretty quick and things just don't wait. They don't set up exactly how I want. So I just literally don't trade it. There's GJ. It ran its whole range down here. And I'll explain it. I'll explain the whole range thing. I'll explain the whole thing that I look for since we're not going to be able to I mean, I'm just not going to force a trade at this point. Gold's up, GJ ripped, GU probably moved off of this news too. Whoops. A little bit of whiplash, so it went up a bit, but nothing crazy. Yeah, I'm not interested in trading GU today. Dollar is going to move off of this too. So what we'll do is I can talk about the dollar and then I'll explain these trades, how I look for them and how I play them. But as far as actually trading today, it's just not going to happen for me. Things are ripping already. But I'm not surprised with gold. I'm not surprised at all, actually. Not at all. Let me do something real quick. I'm going to add this news into this chat. So it looks like private companies added 330,000 jobs in July, and they were estimating 300 or 653,000. So they missed terribly on the job numbers. Which I talked about that with my group this week on Monday and Tuesday. The news, if we were to continue to see missed news this week, this gold price back up to 1860 is going to make a lot of sense here to run up into this. And as well, I'll talk about it, but I'll talk about the dollar too, because the dollar's downward pressure is probably the biggest. It's the biggest thing for gold. But this thing ripped up out of here today. Oh, gosh, some of the spam that gets into my chats is quite annoying.
Yo, what up, Tanner?
What's up, Steven?
Nothing much, nothing much. Is there
Well,
anything you would have changed or anything you would have done different?
well, one thing I would have done different was I would have probably I should have paid more attention to the close. I probably should have just been up on the chart like a lot sooner because that would have gave me more time to prepare for all of this, but I guess looking at gold here on the 7 o'clock open, my idea was gonna be that obviously, let me try to find this analysis real quick. Because this is gonna be, this is gonna be my long-term thought in gold as of right now.
Cool.
And I'll go off of that. Let me try to see if I can. I think I threw this inside of Telegram not long ago. Maybe last week, 2 weeks ago. Dang, I don't know. I actually don't know if I put this out anywhere. I mean, we talked about it on last night, but we have been talking about it, but I don't know if I actually put this out somewhere. I don't think I did. I might be lying to myself. But anyways, we can talk about it. So like when I look at gold, now on this daily time frame, like you can see how price was just kind of running, like channeling to the downside, just chopping to the downside. I remember back in March when it just bottomed out and just ripped out of there. I was talking about, I thought that this would be the yearly lows on gold, and we probably won't see 1670 again, maybe even for years. So that was my idea with gold. And then looking at the recent price, like one thing that I noticed, there was a trade that I put on last year that's a pattern that I started to notice pretty good that stood out to me. And it happened right in here. And what happened in here was price rips below like all these daily lows over here. And then on a lower time frame, you could see it right now, but on a lower time frame, it starts to create like this head and these shoulders here, right? And you'll get this candle like this that closes bearish, and a lot of people will short off of these ideas here. And one thing I'll do is I'll watch like a lot of trading groups, or I'll just read the internet and I'll listen to what everybody's doing. And typically, like, I'll look at a little retail sentiment too, but if I see everybody trying to short something, I want to get long. And if I see everybody getting long on something, I want to get short on the other side. Well, in this case, I've seen a lot of people talking about gold short, but I already seen this huge washout that happened, right? So once this daily candle broke that head and shoulders there, I traded that back to the upside. Now, going off of that same like kind of idea, I see this all the time. And the same kind of thing happened here after we like broke up out of this downward channel. There was like this left shoulder and this big head and this right shoulder. And then price looked like on this daily candle was going to rip out again. Well, what I'll do is I'll wait for those daily candles to close back above like this. And you can trade a bigger move. You could trade back up to the top of the range, like on those moves. So for gold to go back to 1900 right now, it wouldn't surprise me. So my long term, popping out of that downward channel there, and then holding on to these daily supports and then creating higher lows on the daily. Now, right now we have another higher low. So price popping out like 1860 this week, it seems pretty reasonable. And as well, if you look like on a daily chart, you can, for people who like trend lines, you could see price was just scooped up by that trend line again, right? So that move back towards 1900 seems pretty reasonable here. And if we keep getting missed numbers, like I think last week too, we can go look at things. Like last week there was okay news here, but missed news, missed news, missed news, missed news, right? The news was pretty crappy last week. And
Yeah.
if it does that again all week this week, then I really see that like being a good catalyst to push gold all the way back to 1860, if not back into this range of 1900. And what happens here is every time something will make an impulse like that, it will wash out a bunch of, whether it's to the downside or upside, it's going to wash out those opposite positions, and then it's going to like induce new positions. So as we break up to 1860, everybody that's been short around like 1820, 1830, they're going to be forced to fold on those positions, and then it's going to induce a whole new wave of buyers, which could be what shoves us back up to 1900 or so. So my idea with gold today, just based off of that, I didn't want to short gold at all today. I don't want to short gold. And looking at things like above the 1 hour here, I had an idea above this 1 hour, and then I had an idea, well, the other idea could have been above these highs down here, because you're going to have clean range on both. If you look on the 1 hour, you've got clean range on this 1 hour back up to like 1816, pretty much 40. And then you get the same thing over here, like clean range back to 1822.65. So what I'll do is I'll wait on these 15 minutes to set up. And let's say like, typically I like ranges like this right before New York session. I like to see like these lows get taken out. Price will rip back in that range, create a support like that again, and break out of that range. If I see that on a 7 o'clock open, that is a point like I'll execute on that like 10 out of 10 times. And just because of probability, you'll take losses in there. But it has a high, this kind of setup has a high strike rate, right? But as to where this broke out up here, this setup up here has a lower strike rate because we've already moved, X amount to the upside. There was not really any support made. And you're really just taking a breakout, anticipating volume's going to push. You got to be fast about this breakout. So if you look on the 1 minute up here, price chopped around a bit, and it made an impulse of like 9 pips, came back down, didn't really break into the range, but went about 15. Then we start to see the range broken. You guys know how it is with me though, like 9, 10, anywhere between 10 to 15 pips, I'm in and out. So whether I didn't close here and took a little drawdown here, I would have closed up here. But ideally, this would have been the breakout down here that came at 6:15. And the reason I don't trade at those times is because the volume comes in times of sessions. So like 7 o'clock open is New York open. You're going to get a lot of money coming in. And then 8:30 open, at least my time, Central Time, you're going to get the equities open, which is going to push things too. So that's why I only trade in those times. I don't trade I traded pre-New York at the beginning of the year just for this reason, because the volume was good. And when Trump was in office too, he was tweeting all the time. All kinds of crazy stuff was happening. So it would move the market pretty well too. But you can't trade it like that anymore. It's just not, it doesn't, the volatility this year has been different. But that's a pretty big move today. 120 pips to the upside. Looks like silver's moving up a bit too. And I don't ever trade silver intraday. The spread on it is, it'll equal out with the spread, but the spread's it's bigger. I don't like to play in it. But the dollar too reacting to this news coming down. The daily looks good on the dollar too to continue back down. Because every time it topped out like this, since the March highs when COVID hit, it just snaps back every time it tops out. So anytime you see the daily, like a really obvious turnaround on it, it just snaps back literally every single time. And it's making another one of those obvious turnarounds. So I'm anticipating that the dollar just snaps back again, but it keeps coming back down to this. Once that breaks though, it's going to be a multi-year low sitting back at like 79. This thing's going to fall off once that happens. See what the S&P is up to today. Coming down a little bit. Oil's coming down. Oil's pretty good long term too. Looks like Bitcoin, only trade I'll put on Bitcoin this year is if it comes back down to these lows. I want to short it underneath this. It's the only thing I'll do with Bitcoin this year. I don't ever trade it. So I agree 1900 is possible. Continue poor news. Yep. Coronavirus. Yeah, and then with all these lockdowns again too, it's not going to help out at all. Well, it'll help us, but and two, I'm looking like silver's a bit, it's lagging here a bit. It doesn't look as good as gold to me right now. But if it'll break back up like above 26 bucks, this daily low is going to be locked in for me. I think it already is. Because I remember I was just watching price come back down at this trend line here, gonna see if it rejected, and I thought I was gonna melt down a little more towards like 23 something, but it ended up bouncing off here pretty nice. It's going back up now.
I wish TradingView would let you do two charts at once, so and control them with the same controls.
Yeah, I think
You compare them.
yeah, you can do that. If you have the pro version, you can split it in half.
Oh,
You can split it in half and have two. I never really found a reason to have that, so I never really got it. I mean, all that it does is it allows you to do some different things like with your watch list, like different colors on these, but I don't really care about all that. And then you have like access to different kind of like candlesticks. So you'll have the Rankos, which none of this is really that important, honestly. I just trade with Japanese candles anyway, so I don't need any of that. And then it'll stop the pop-ups too, but I typically don't have problems with the pop-ups at all.
Yeah, they're minimal.
Yeah, it's not overwhelming.
We're gonna get
Yeah.
Trap King on here today to explain any traps.
No, he's got some things going on right now. So I don't know if he's even gonna be around this week, but give me 1 second. I'm gonna step out and shut this car off real quick and then I'll be back in here. All right. Somebody said it's interesting if you watch DXY while watching something major. Yeah, I track the DX. The only reason that I pay attention to the DXY is I watch this because gold and silver, that's it. Because take a look at this if you compare this to gold and silver, right? Look at March on the dollar when COVID hit. So if you look at March on the dollar, and then you go look at gold on the dollar, gold compared to the dollar during COVID, during March. So this is a weekly time frame. This doesn't look like a lot, but these things snap back pretty hard during COVID, and that's just what happens. You're going to get that once one sector sells, they're going to go to cash during times like that, during a crash. So you're going to see everything sell. There's no safe haven during a crash. No currency, no, I mean, I guess depending on how you play it, the dollar could be, but you really don't have everything. The stock market, if you go look at the S&P at March, same thing. You have a huge pullback in this during March. Now, the thing to look at here with the dollar now is that it moved up and gold moved down, right? So they have like an inverse correlation, which is the reason that I pay attention to the dollar the way I do. So then look at gold after March, like it just gradually went up here. And if you look at the dollar after March, it gradually went down. But if you look at the dollar recently, right, the dollar bounced off of this weekly and monthly low down here. And once it bounced to the upside, then you can go back and look at gold, right? Once the dollar bounced there, gold continued back down to the downside. So there was downward pressure on gold, and there was, some buying pressure on the dollar. But as the dollar continues to come back down towards us again, right, you're going to start to see gold get scooped back up again and continue to move back up. So the only reason that I pay attention to the dollar, I only look at it long term. So you don't want to get in the habit of looking at the dollar intraday and trying to trade the dollar's like intraday move and trade the opposite of that on gold, because it's not gonna work out. You're gonna end up taking a loss every single time you try that. Because intraday they might move together sometimes, right? But overall, on their daily, weekly, monthly, they're gonna be moving the opposite. So I just pay attention to the dollar, and as things start to crack back down, that's what's going to be another catalyst to push gold higher. I anticipate like last quarter of the year, gold and silver like probably perform pretty decent. But typically on these, I don't even talk about any of this. The only reason I'm doing it today is because I got on here. And the only reason I even got on here is because I said I would, but I'm not even taking a trade today. Everything. And here's the other thing too. This is just pure discipline over time. A lot of people will try to find a reason. Like I haven't even opened. Well, I did. I opened it to take a screenshot, but outside of that, like I haven't even opened my MT4 for any reason. It's not even a thought in my head to place a trade like at all. So I don't go chasing these moves once they happen, right? Once I see my move happen, I know I've chased before, and I know that if I do try to run after that, it's not going to be good. I'm going to lose the trade, and then I'm just going to be pissed off going on about my day that I even took the trade. So once things start to move, like I think, and if in this case, like, we talked about gold, we even talked about gold when the news hit, that price was going to run back above the body of that high of that candle, and that it was going to run. I mean, it's easy. I see it all the time, but it's just not a part of the plan. So I'm not going to execute on these ideas because it's just not, I'm not allowing myself to do it. The discipline says can't do it. MT4 Forex trading account, yeah. So the good thing about with MT4 trading like this, and I seen some people just talking, running their mouth in this chat, like I posted something in the or my Telegram and it got shared. And somebody replies in there on this other channel where somebody shared my screenshot. And I talked about how gold was ripping last week one day. And these people are like, oh, kiddo, gold ain't ripping. You know, let's see it break 2000, then that'll be ripping. It's like, bro, you have zero like idea what you're even talking about. If you have leverage behind your money when you're trading something on MT4, a $1 move on gold can be ripping. A $5 move on gold can be ripping. When you have a $20 move on gold, you know, $10, $15 move, that's huge intraday. That's a massive move. Nobody intraday really is going to probably hold this whole move. They're just not going to. And if they are, they're a hedge fund or they're got a micro lot in there. Anybody with size isn't going to hold. You're just not going to. You're not. It might be your plan to, right? Like that might be your plan going into the trade. Yeah, I think gold's going to. How many times have I said I think gold's going to whatever, right? Gold going to 1830, 22 today, out of both of these levels, and I'm not going to hold on to it going up there, because when you have leveraged money behind it, you tend to want to trade your P&L, not the actual market. So you start to look at your money and you think about it and you go, well, I'm up 500, 600, whatever it is, $1,000, $2,000. You're not going to want to wait for that whole move, because if you are wrong and it flips on you, you're going to be down that much too, which in this case, like 100 pip movements, we're never going to be down that or up that much. But maybe if you're trading with DraftKings, you might be, but not with me. So when you have that leveraged money, these moves become like, these are pretty significant moves. It's not something small. You can get either you can either make a lot or get destroyed, which is why most people blow up too, because they don't know, they A, don't understand the leverage, and B, have zero discipline, like no discipline at all. So what they'll do is, you know, people will come in and over leverage and might make a bunch of money on this trade, but then they're going to turn around and just double down on it the next time, and they're going to get destroyed on it. And then it's going to snowball. Then they're going to double down again, and they're going to try to make it all back. And then they're going to take a loss again. And then they're going to double down. They're going to try to make it all back. They're going to take a loss again. I've seen it happen. I've seen it happen so many times. I had somebody that I worked with that he was smart and is smart and was a good trader and is a good trader, but he took an account, I don't even know, like something pretty small to like 20K, like relatively fast, and then blew up after that, blew everything. And it's all because of the greed and the over leveraging and all. And I can only say it so many times, but until you have it happen to you, you won't listen, you won't pay attention till you blow up. After you blow up a few times, you'll be like, if you even want to stick around. Most people after that just get discouraged and think it's all fake and you can't do it. It's because of your crappy discipline. That's why. The only reason I run my mouth so much about it is because I did it all too. Every single thing that you could imagine in trading, that's the worst thing you could do, I've done it. I've done the worst. 20K loss in one night. I've done all of it. So there's going to be more news at 9. We won't be on here for that. There's going to be more news again at 9:30. We won't be on here for that either. Tomorrow, we're going to have a clean morning, but I won't trade to the public tomorrow. And then Friday, oh, unemployment claims, that's going to be good. But Friday, I'll trade again to the public, and that'll be some good volatility there. 7:30 in the morning is going to be crazy. I don't even know. I don't even think if there's a trade that sets up before or a pound pair, we can trade that, because I don't want to be in this during news. This is going to be This is gonna be insane. Unless I size, we'll see when I get there. We'll see how I'm feeling. I might size down on it, try to play a breakout. If gold's set up and is on its way to where I think it's gonna go this week, I might try to play that this week. So we'll see when we get there. But yeah, this thing's breaking up pretty good. And another thing that saved me from a lot of, or it helps me tweak everything is like I'll write everything down every single day. And if I notice that things like this happen, if I notice my move has been made for the day and I try to chase and I lost, I write everything down, right? And so what I can do is just reflect on that. And then next time I see that setup happen, I'll go back and think about the trades that I've taken on that. And then I'll read it. And typically in there, I'll call myself an idiot and say what a stupid choice that was. And how I'll never do it again. And at this point, the mistakes that I make now, I don't even have to go back and look. I'll still write everything down. And even no trade today, like I'll still write everything down because it's gonna pay dividends later when we have these setups happen. And when we have these setups happen and they don't have a high strike rate, and I've wrote it down and talked about it to myself before, it's gonna pay off. You got to write everything down. It's something a lot of people who trade, they fail to do that, because just this year alone, like one little thing that I cut out in the beginning of the year was trading right before New York. So I would trade the volume pre-New York based off of my past, and I would take a loss this year like almost every single time I did it. And then I would have to trade, like I'd really have to stalk out a quality setup during my original idea would play out during actual New York session, and I would be taking it pre-New York, and I would take a loss, and then I'd have to hit it a second time. Then I'd have to hold longer than what I held for the loss. And then, I was, if you want to say, barely making anything on the day compared to what I should have been. I would write all that down, and real quick I started to notice this isn't working out, and I can tell by the P&L it's not working out. So what I do is I'll go back, and anytime I have that like consecutive something popping up consecutively over and over again, I'll just literally fix it. And if I don't write it down and I don't pay attention to it, I'm not going to know. So it'll be like I'm doing the same thing over and over again, expecting a different outcome. You're just not going to get it. You got to stop ignoring the signs. So what I'll do is just write literally everything down, every thought, the trade idea, explain everything, just mentally everything. Like today I didn't take anything, but I'll still write it down. Somebody says, I know that guy, 300 to over 20K. I don't know if you know that guy. I don't think you do. Maybe you're talking about Hussein. That's not, Hussein it wasn't who I'm talking about, but Hussein has done that like 3 or 4 times. That was like one person that could do some pretty, to me, stupid stuff and get away with it every time. If it were anything, if I ever tried to do it, it would have never worked for me. But I don't know. He was pretty good at finding a way to put leverage to use in what I would have thought was risky times, but was normal to him. And that's just the risk tolerance of some people. Like, think about the guy Nav that the FBI, raided his house or whatever, and he was spoofing. That was a guy that was like able to put size to work, and he even left his firm because they wouldn't up his limits, and he was doing like exceptionally well, but they still couldn't up his limits because at that point he would be too over leveraged. and it doesn't become favorable for the firm. So somebody like that is able somehow to deal with in their head the leverage and stress and emotions in a way that a lot of other people can't. That guy's trading was just insane. Hussein kind of reminds me of that in a way, like he could put size to work. I don't know how. If I ever try something like that, it just blows up in my face. So I guess what I'm gonna look at going in at this point, at this rate, going into tomorrow, I'm gonna be watching these buys back above 1833, 1834, because let's say that price breaks out of this area tomorrow in a volume session, it's going to move. You've got a clean range back up to 1860. Now, again, I'm not going to yank that. Like, I'm not going to be able to hold that whole move. But what I can do is I can trade in a nice clean area, and I can catch a nice, probably a nice pop out of there for 20, 25 pips. We'll see tomorrow how it is. But that would be like probably my idea going into tomorrow right away, is to wait, because now I got to see how the price action ends on the session today, right? We're an hour into this today, and then you still have the equities open, and then you have the rest of the day, and then you're going to have Asian session, then London, then back up into New York again. So what I want to do is see if, going off of these lows and higher lows and higher lows, if we can continue running bullish tomorrow at this level, we're going to have a nice breakout tomorrow. And there's going to be some unemployment claims. Let's say that comes back negative. That's going to be a nice catalyst too, to push price up through this area. If the 15-minute closes like 7:15 up in here, this and the next one kicks off at 7:30, and this news comes back negative, I'm gonna just throw my entire net worth on a buy stop up here and let it just run up. Not actually, but it will be a good trade tomorrow. We'll have to see about what's going to happen with that. Oh, there was one other thing I was going to bring up too, was you'll start to begin to notice these like price cycles too. And one thing that I noticed, like trading out of this consolidation, this is something that I'll look for. These are like textbook setups on these breakouts, but one thing that I'll do is I'll look at this, because what you'll notice is during Asian session, you'll get a consolidation most of the time. And what'll happen is during London on these kind of trades, I'll see failure on the breakout. So something like this. And then pre-New York, what I'll notice is a support built, right? And then during the New York volume, you'll get that breakout. This exact setup right here happens all the time. Whether I invert this chart and it's on the sell side, so whether I'm shorting this, or whether it's on the long side and I'm buying it, this setup happens all the time. Like literally, this is a textbook setup here. This crap happens. I see it all the time. Like just on the gold buys out of yesterday, right? Just on the gold buys up here yesterday. If you were to try to look at something like that, like here's an Asian session range, and you get price that tries to break out during London down here. Pre-New York, price is like breaking down, and this thing rips back in this range here and then closes back above it. Like you end up getting a little bit of a breakout up here. Now this is not as clean of a setup, but yeah, this kind of setup, this almost like manipulation, this happens all the time. I see it everywhere. But yeah, you can invert the chart. You can right click over here and invert the scale. And the only reason that I even pay attention to that is because when I swing trade, like all last year, 90% of my swings are all short. So I have trouble trading something like long. So what I would have to do is I'd have to invert the chart and look at things. So bear with me, this is confusing. Gold is going up, right? Like it's going up here. And on the daily, like we have been going up. But if I invert this chart, it looks the opposite, right? It's literally the opposite. It's the opposite price action. So what I would have to do for those when I'm looking at buying something is I just needed to read it as a sell. And I just short everything all the time on the swings. It's just the way that I am. So like if I wanted to buy gold, I would just have to read that swing as I would have to look at that and be like, man, does this look like this thing is going to go down? And in all reality, it's really going up because I just inverted the chart. My brain doesn't work that other way. I can't do it. Yeah, my short positions are pretty favorable. I don't like to go long. Yeah, so I'm gonna work on that streaming software again today. I'm having a problem with it. There's a disconnect between YouTube and this software that's not, something is not allowing it. If I were to just go live on YouTube, there's like a 20-second lag. And with the way I trade, we can't have a 20-second lag. Because if I am explaining something and you guys are hearing it 20 seconds later, that move is already going to have been made or whatever, right? And then some people don't pay enough attention, then they're still taking the trade 20 seconds later, and it's all everywhere. So I'm trying to figure that out. Once I get that figured out, hopefully today, I'll be able to stream everything from here on out. But outside of that, that's going to be it. I figured I'd get on here, just ramble on a little bit about some, just because I said I would get on here, but I'm not going to actually trade here today. Again, the move, typically we're already trading something like this. So this move today, this has been made. There's nothing we can do. And GJ was going to be the other idea, but can't trade it also. It already happened.
Yeah, I'm not sure any of the streaming video platforms don't have a lag. The only ones that don't would be stuff like Zoom or Skype.
Yeah, I know if I have on Streamlabs, if I get it connected, there will be no lag between us at all.
Oh,
It'll be,
Streamlabs, never heard of them.
yeah, it'll be real time. And if not for whatever reason, which I know people that use it and it works for them. If for some reason I can't get it to work, worst case scenario is we're just still using Zoom.
Yeah, the video platforms that have that, the streaming support, they want to have time to analyze the video for violations and taking it down with AI. So if it's not delayed, they can't do that.
Look at this. NZD USD is 70% short. And this thing's just going up. This is stopping out a lot of people. Not surprised. This is another little tip for anyone who trades currencies. Go in and look at the percentages of long and short on the, it's an average of the broker's clients long and short. And you can typically everybody's on the opposite side. Whatever this number says, you should be looking at doing something on the technical side of the opposite. Don't just go in and just buy it, but if you can get a setup on the opposite side of these things, you're probably doing all right. It won't happen every time, but it's pretty useful. But I think that's gonna be it. Enough rambling on, enough about everything. I'm going to go on about my day, and this trading today is what it is. No setup for me. We got to just leave it alone, come back tomorrow, do the same thing. Well, I'll be back live to the public Friday. So unless if I can get the streaming fixed, I'll go live tomorrow for the public. So I'll see. I'm gonna hop off here. I'll see all you guys like sometime this week, either tomorrow or Friday. We'll see. I'll
Take
catch you
care.
guys later. Yep.